Welcome back, folks. Greg Silverman here, Outsource Chief Investment Officer and Financial Officer. Welcome back to another Come Learn With Me series. What we do is we curate a bunch of articles every week on my social media platforms, quite a vast platform, quite a lot of followers. And then we see what all does well, performs well, shares, likes, etc. And then we read them together in a Come Learn With Me format. So let's see what this one is about. This is from last week. And stick with me to the end, and then I'll tell you a little bit more about myself and some of the service offerings that we can help you with. All right. War inflation is slowing. Here's the S&P 500 level, where a Bank of America strategist says investors should gorge stocks, or gorge. That's quite a strong word. Farmers harvesting wheat field near Melitopol, Zaporizhzhia region, Ukraine. Are we past the worst financial side effects of Russia's invasion of Ukraine? Michael Hartnett, Chief Investment Strategist at Bank of America, created a war inflation chart. It's a simple index of Brent crude, European natural gas, and wheat prices. These the three commodities most clearly tied to the direction of the conflict. Now, let's see. Definitely had a spike up at the end of 22 and now seems to be coming down. Okay. Wheat prices have dropped 44%. Brent oil has dropped 24%, and European gas has dropped 21% from their peak. Hartnett says it doesn't make sense for Russia to close the Nord Stream 1 gas pipeline indefinitely. That pipeline is shut until July 21st for scheduled maintenance. This article, when? We got a date reading on this one. July 16th. Okay, so a little under a month ago. Hartnett, who's been pessimistic on stocks, said there are risks to the consensus view of both a shallow recession and that shallow inflation will kill inflation, allowing a pivot by the Fed to refocus on growth. He says in real terms, that is adjusted for inflation, policy rates are still deeply negative at minus 6.7% in the US, minus 8.8% for the Eurozone, minus 6.1% in the UK, minus 2.5% in Japan. Is that right? Real terms. Well, inflation has run hot, right? That could be right. A spiking dollar, he adds, often portends credit events, as it did in 98, 2008, and 2020. The dollar reached new 20-year highs this year as the greenback rallied against the euro and the Japanese yen. All that said, he gave levels where investors want to buy stocks. An S&P 500 at 3,600 would be grounds to nibble. 3,300 would be room to bite, and 3,000 it would be time to gorge. The S&P index ended Thursday at 3790, and right now it's about 41,000. So I would concur on that. I want to show you guys something just on those levels itself. We can actually see. This is why I love charts so much. But let's just have a quick look at those various levels on charts of the SPX. Give my grinding computer. That's Cape Town, South Africa in the background, guys, in case you didn't know. All right, so if we expand this to a weekly chart, and let's see if we can get a little bit longer going here. I think my subscription only allows us to go out 5 years, unfortunately. Have to renew, I guess. Okay, 5 years, I'll take that. Weekly chart. All right, so we can see, so 3,600 is this region over here. Lost, 3,600, and we ended up at about, let's put in some price labels here. It's always good to see where you are, context. I like context. So we hit bottom at 36.36 in this year. Okay, time to nibble. Let's see, we've had a bit of about 3,300 covered, back and forth when we came back there. 3,000. What is 3,000 exactly? I guess that's a nice round number. Bringing us back to the lows 20 and 91. I think that would be extreme. That would be the extreme. So who knows? Probabilistically, 3,000, 3,600. It's a good time. All right, guys. I hope you enjoyed that. I find my highest value add is servicing or serving clients, and I serve clients in the capacity of an outsourced chief investment officer, helping find deals, due diligence, or even simple asset allocation. Or what I've found myself quite effectively doing is leading organizations as the CFO, particularly private equity owned organizations where I can go in and execute on the private equity owners' plans and achieve it for everyone. So take a look at some of the links below, like and subscribe, and come join me for another Come Learn with Me sometime soon. Greg Silverman out for now.